So this is a broader last question I wanted to ask. This really actually had me a little bit pensive for a little while, and
Mm.
this was someone on Reddit who was asking, "What are considered acceptable returns for an automated strategy?" And you know me, I'm insane when it comes to the returns I'm expecting for trades. Um, but I was like, okay, what would be what would be enough? So how do you think about it? Like, are you factoring in the number of trades you're taking and the the inflation rate that you need to go over, the commissions that you need to be able to pay? Are you factoring all that in, or are you just focused on getting a strategy that actually generates some sort of positive return and then refine it with the expectation that it becomes profitable and compounds returns over time?
I think the last thing you said there is about as close as you can get to really, attempting to beat the market. But one of the benchmarks that I think you should start from is knowing what returns the market even offers, and that understanding, I think, leads you to understanding how difficult it is to exceed that. You should start from the premise that in many cases, I mean, many cases, particularly momentum and mean reverting strategies that trade intraday, they tend to underperform the benchmark. They might do very well. They might have good, metrics from a profit factor and win rate perspective. Like, I win 90% of the time, and my profit factor is 2.5. Okay, great. But you're only taking out very tiny slices of the market returns if you're only trading intraday and you're trading in short periods of time. And you might make the argument that, well, I win so frequently and I'm trading with size and leverage that I'm able to exceed the returns if I was just buying and holding. Okay, that's totally possible. And then I hear the Reddit crowd and Twitter already responding with the most common phrase in financial markets: it works until it doesn't, right? And that is true for many strategies. There are regime changes. Oftentimes it's difficult to get a strategy to hold up over time. You get this like awesome win streak, and then all of a sudden it just starts to fall apart and you keep searching for the holy grail after that. So I think when it comes to acceptable returns, ultimately we want to start from that benchmark. I get pretty skeptical if people are posting anything above a 20% CAGR, or compound annual growth rate. It is extremely difficult to do this consistently for many, many, many years. So ultimately, many of the strategies that I have are attempting to at least match market returns after commissions and slippage and taxes. And if it can't really do that, I don't think it's a great strategy. So then you're kind of left with this next bucket of possibilities, which is that if I have a decent strategy that trades intraday, or maybe it trades over a couple of day period, or it's a swing trade, I might be exposing myself to either additional risk or using leverage in order to exceed those market returns. So it's a really tough answer. Like, I feel like there's a masterclass here of like how to think about risk and reward and risk and returns in markets. And it's not a very simple answer to ask to say what is an acceptable return. It largely has to do with your appetite for risk, your access to leverage and margin, the amount of capital you're working with, and how you're currently trading markets. But also, the criteria by which you decide your strategy needs to perform is also a rule you would need to follow. For me personally, this is not worth doing unless I can beat the market returns.
Interesting. I have like this dual view of it where and it's what led to me really swinging big whenever I'm swinging in the markets. And I know I'm very facetious about it, but I actually do take care to trade properly.
I know you do.
Um,
We should
but
make that
the
clear, because we talk a lot about like, oh, how Tom is all insane with his trade. No, no, no.
right.
Tom's actually really smart.
So for me it's sort of like learning how to code or doing some other job. For me, the developing a strategy, understanding what rules I'm following, and the asset I'm trading, uh, to me, it's all exercise of learning. I'm gaining more information about how gold reacts and how it reacts to different monetary and fiscal frameworks, how it reacts just naturally through the ebb and flow of the different market participants, how it's different than how oil reacts, how it's different than how the dollar reacts, how they correlate together. And there's every time I try a new strategy, I gain more and more and more and more knowledge. And then what happens is that for a period of time, it's almost like you know, a limitless type situation where I get to see, hey, wait a minute, there's this pattern that's been going on for the last 3 cycles. Uh, I have an expectation here that now gold will be in this channel, and that if and the options are, the implied volatility for the options are priced low. If I actually play this the next 3 bounces on this, I have a high likelihood that those options will pay off pretty significantly, and then I'll put in a strategy, and then just run it for that period of time because I've spent a year looking at it and realizing, hey, there's like a window of opportunity. Sort of like playing the old video games where you have to get across something, and there's pistons going up and down, and you spend your time looking at it, and you go, wait, oh, it's 3-2-2, 3-2-1. Okay, now I can go through and make it to the end, and then get the big payout. And so for me, the idea that, or like when you're learning any skill with programming, I mean, how many jobs did I do where I made like no profit? It was just learning how to deal with customers, learning how to answer these questions, learning what have you. And then
Sure.
you wake up one day and you're like, hey, wait, now I'm making a living off of this.
Yeah.
And so that's very much how I see it, that the market, the big benefit is that you get this, for me, this knowledge of how these different things interact. And then when the opportunity arises, you have the knowledge to take advantage of it.
Yeah, I totally agree with that viewpoint. I think that's fair to say that maybe another way to say that is that you're paying tuition to the markets, right?
There
So,
you
like,
go.
maybe you underperform slightly, but it's because ultimately you're taking this time to actively invest and actively understand how markets work. And I think that's a fantastic investment in your time, and the education you're going to get from that is enormous. We've talked about this before, where I honestly think that being a trader and investor, I've learned more about myself than any other endeavor I've ever pursued. Even as an engineer, like being an engineer taught me how to think about logic, how to think about syntactical structure, and rules, and how the machines, how CPUs work, how RAM works. Like there's a ton that I've learned in that domain, but it's not taught me a really good depth of me and my own ticks, my own weaknesses and strengths. Like I've developed a strength to understand things logically and analytically, but trading and investing, man, I've learned all my weaknesses, all my strengths, all the things that I need to improve on. So it's a fantastic endeavor from that perspective. The psychology around all of this is amazing. But beyond that, it's an endless journey to understand the math behind markets, the participants, the different ways in which you can express a trade, the different types of asset classes there are. I mean, you're never going to be tired for learning something new, and there's plenty of dry material out there to read.
I'll tell you, it's given me a renowned appreciation for. I used to think that people in finance and in Wall Street were the bad guys, and now I'm realizing, no, 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 they're not the bad guys. They're just pirates on the water, and there's things to be learned and things to be gained from learning what they're doing.
Yeah.
All right, well,
Peter says, sounds like you're describing marriage.
that's
that's
exactly right.
that's pretty good. That's really good. Yeah, I've learned more about myself through my marriage than trading. Actually, I should
That's right.
rephrase that before my wife reads this or watches this episode.